Hello, welcome everyone. Sorry I've been absent. We had a couple things going on over here. Big release for our investors using the TradeStation platform. What you see up on your screen here is a dual time frame, and some people have already probably had multiple time frame analysis tools. We released one back in 2007, I believe it is, and it just basically gave a histogram bar at the bottom of your screen that allowed traders to see if you were in a multiple time frame buy signal. Now, most of the buy signals that I use, many of you are familiar with the TradeStation lifetime package, as well as the Thinkorswim program, where Thinkorswim uses the PPS indicators. That's the thing that shows those arrows up and down. What we did here with this new tool, and it's relevant as to figuring out which way the market's going to go for the 4th of July holiday. So first and foremost, let's take a quick gander. This is a green line here, indicates the higher time frame. This is the SPXL. It's a leveraged ETF on the S&P 500. It's a 60-minute time frame. What we're doing is using a 60-minute time frame and an anchor higher time frame daily analysis. If the daily's in a buy mode and the 60's also in a buy mode, then both indicators are in an uptrend. And if that's the case, then we make the color coded would be bright blue. When you get a daily in a buy and the 60-minute, it gives a white, and then maybe we get into a daily sell signal for a day or so, then you get a review. As long as we hold support, everything's positive in how we use this. We also incorporate another tool. This is the PMC indicator. It's a relative strength tool. It's hard to use the relative strength on an S&P derivative product when you're comparing it to the S&P. So I really don't use this tool right here for any analytics when I'm trading the S&Ps, because this is, again, a relative strength against the product and the S&P 500, and that's why I'm showing you the arrows there, SPY. So that has no relevance here. But this is a volume indicator, and this is kind of giving me a look-see into that the market is in a formidable strengthening trend. Where I would draw the line and say it's time to, I guess let me back up a second. Right now I'm long the market. We're long based on higher time frames, and the question begs, when would you add to a trade? So if you're long the market here, and prior to the weekend coming in, seeing that Trump and G20, everything was technically warm and fuzzy, you just didn't want to get aggressively long and buy a breakout before that news was coming out, right? So you have a core position where you're long. Where would you add on to the trade? Well, here, right now is an add-on, and what I would say, and that's what we have done for J Person Asset Management account, we're just scaling in lightly. How much higher can the market go? Well, personally, I believe that we will see at least a test of 55 or higher on this move in SPXL. Let me change this to spiders for you. On the spider, we've been calling for a move up, and I'll put this, as you can see right now, look at Person's Market Catcher. It looks like a flat line. It's because it can't compare itself to itself, right? So it's non-relevant. So what I'm looking for is a move and this is something that we had personally put out in our weekly thoughts and observations. This is a newsletter that we give out every single week, and many of you had asked for information on this. It can be found at Person's Planet website. Just go right up to newsletters and click on there, and you can read on how to get yourself at least a free trial to this. First and foremost, we have weekly resistance, 296. Weekly pivot resistance is about, let's call it, right against that red line. But what I'm kind of looking for is something a little bit more aggressive into this earnings, and I'm calling for a move right around in here. This could take time, so what I want to look for is as the market if it continues to form higher highs and higher lows, I'm looking for an eventual run. With accommodative positioning in volume, and again, if the advanced decline is healthy, then I would be looking to add to the trade on strength at this point in time. I don't think we've gotten that blow-off top quite yet, and we certainly could see some more 4th of July fireworks. Seasonally speaking, the market in the S&Ps is strong, headed into the first 12 trading days of the month. So we have that going for us. I think that we've got about a week and a half away before we really get into a barrage of earnings. We got the rest of this week, which is the 4th of July holiday. We got Monday's unemployment report. Next week, calendar's extremely light, and it's the following week. That's when the fireworks begin. So apart from any disasters, the FOMC next week comes out with the minutes of their last meeting. So you're going to read through what the Fed was thinking. As long as we have toned down the rhetoric of trade tariffs, if we see the unemployment report on Friday that puts us right into the sweet spot where the Fed doesn't take off interest rate cuts off the table. In other words, if the report is not hot, if we don't have heavy inflation, if we don't have increase in hourly work wages, if we don't have a really strong number, boy, the market's going to like that, in my opinion, because it would signal that the Fed is not going to take back the rate cut that everyone's been expecting for the July meeting. So that's what I'm looking at, and that's why I think that right now with the S&Ps, we could still see some further gains to the upside. Now, here's the bad news, or here's what I would look at for bad news, right? So if the market starts to break below and closes, and we get both the daily and the 60-minute and time frame sync, and it starts to break below support. This is a long-term support in the market. This was before the president's meeting here. The market pulled back and it held and it took off. And as you can see, we are in a stair-step arena here. And if we took out the swing low, more importantly, we take out the pivot levels and the last conditional change. And that's what you see here on your screen. That's the pivot support. That's 289.29-ish level. This green line is the last conditional change. That's 290.35. And if we continue to make higher moves, the green lines, they move up. It's dynamic change of stop function. These, just to give you an idea, this is the higher time frame support. These fuchsia colors are the shorter term time frame support. And, until support's broken, you stay on the long side of this market. So that's the S&Ps. Now let's see what else is on your screen that you're looking at. This is kind of an unusual situation. The system, let's go into SPXL here, and I'll share this strategy with you. The other day, of course, the system was long, and it dumped everything on that higher open. It has a built-in profit target model. It went long again and took a quick hickey and got stopped out yesterday, and now it's back long. So I like that pattern with the volume here, and I like that on balance volume confirming. So to me, if we get a newer close in SPXL, gang, at least if we can close greater than again, this is a 60-minute model, so this would have been today's high. So this is, again, July 2nd, Tuesday turnaround. If we can finish the strong close and close a 60-minute greater than that line of resistance, then I think we are on the verge of upside momentum, obviously. What helps this trade is the identification, and this is a VXX volatility model that we use at J. Person Asset Management. It was short, so when the volatility, the VXX is going down, it kind of gives you an idea that the stock market can go up or at least not crash. Now remember, just because the stock market might not go up does not mean the volatility can't go down. So that's what that's kind of showing. Today on the little spike up, it did knock out the trade with a massive profit here. So this strategy is now flat. It will need at least a few more hours or some more criteria to get back in on a short trade, but this is the model, what it suggests. It took a profit on that, so that's okay. Now let's move to one other market here. This is the inverse of the VXX. This is the SVXY. So when the VIX goes down, SVXX goes up, SVXY, goes up. It too took a profit. That red line is a trailing stop function, and right now it's flat. So, all right, great. It took a profit, and what you're looking at here is just an automatic program system that gives us areas to get in. It has trailing stop functions. Then it gets in. It has trailing stop function. Blue lines means it's a profitable trade. Am I happy it gets out of the trade? Well, ahead of the weekend, possibly, but we have to trust the strategy. It makes money. Can you make better money? Guys will post stuff on YouTube and say they don't like the this and the this and the that. The message here, gang, is that I'm using and just sharing with you techniques that give me insights as to the market condition. If you feel that the market can't go up any higher, then at least base that on solid evidence. Is the volatility rising? If not, then perhaps you may want to readjust your position. Is advanced decline strong? If it is, then you may not want to be short the market right now. And so using these models, and this is all based on the Person's Algo 17 Extreme program. And we haven't really gotten into that, but we will after the holiday if you're so interested. Watch back and come back to the YouTube channel. But any event, what I wanted to bring to your attention is right now I just don't have signals to be selling short the SPY ahead of the 4th of July Independence holiday. With that said, I want everyone to have a great holiday, and we will be back here with another update and to share with you the results, some of these trades, and again, if something dynamic shift happens, such as a market sell-off, we'll be here to alert you. Thank you all very much, and again, have a wonderful 4th of July weekend. Thanks, everyone.